Over 90% of lending decisions are based off of a credit report. But what is a credit report? I'm Ben Dodd. I'm a credit expert, and I'm here to tell you exactly what a credit report is. Before we get started, I want you to subscribe to this channel now. The reason why is I don't want you to miss notifications the next time my credit videos come out. Okay, what is a credit report? A credit report is a snapshot in time of your financial outlook as it is right at this moment. And it's comprised of your personal information, which is considered private, and it's a very private report. And it's usually obtained by lenders, and that report is what determines to them what your ability is to repay potential debts. So that's going to be comprised of your personal private information. Any banking account that you have should be for mortgages, autos, credit cards, and the payment history, how long you've had it, the available credit you have. So that's what's all on a credit report. But keep in mind, it doesn't have everything about you. There's stuff that we pay bills on every day, or we have accounts that aren't going to be on that credit report. So the majority or everything on that credit report is going to be items that we pay interest on or that we've applied to, like the accounts that we said. So mortgages, student loans, autos, credit cards, anything that you've applied for, and generally that's going to report to credit reporting agencies. And again, that tool is going to be used to determine whether or not you're going to obtain more credit, and again, what interest rate or the amount that they're going to lend to you. Okay, so who can see your credit report? It's not. It's kind of a tricky subject. The who can see your credit report is generally going to be the people that you've given permission to view your credit report usually for the purpose of obtaining financing. So it could be banks or mortgage companies or autos. That's who's generally going to view your credit report. However, there are different types of credit reports. So there is a full credit report, or considered a hard pull is what we call it. Those are the things that will show up as inquiries on your credit report. Those are the ones that usually apply for. But there are some soft pulls. Now, a soft pull won't be a comprehensive credit report, but it'll give enough data for, let's say, somebody like your credit card. That's where your credit card offers are coming from, and that's called a soft pull or short credit report. And those are a little bit different. They're not really comprehensive or share private information on there. So that's basically what your credit report is and what it's used for. Okay, so what does your credit report contain? Your credit report contains your personal and private information, which identifies you on that credit report. And that's the important part, because obviously you don't want anybody else's credit items on there, and you want it all to be just about you. So your personal private information is going to be on there, and that's something you should make sure is 100% completely correct. The other things that are going to be on there is any credit item generally that you pay interest on. So that's going to be mortgages, credit cards, student loans, autos, anybody who reports. Equal credit reporting law states that if one company reports for one person, they have to report for everyone. So generally you're going to see anybody who's applied for credit, obtained credit, that company is going to report for everybody that they have for that credit, and that's going to be on your credit report, is specifically your accounts and your items. It's also going to show things like collection accounts. So it could actually have some derogatory things that are going to bring your scores down. Those are usually the items that you want to challenge and identify as problems that come with your credit score. There's also going to be public record in some instances. That could be things that show up on your credit report that were court specific items, like bankruptcies, liabilities that you're actually taking to court for, and they're seeking action on that. It could be tax liens as well, things like that. And then finally, there's going to be inquiries. These are the people that you've went and applied for credit with. They are legally obligated to report that you've actually sought some financing with them, and those inquiries are going to show up. And again, it's a good idea not to apply for anything unless you really need it, because that can directly affect credit and credit scoring as well. So those are the items that are contained on your credit report. So the items on the credit report, one of the most important ones I referred to was your personal information, which is also sometimes considered private information. However, a lot of that's out there in the open now. But your personal information generally consists of obviously your name. Well, it's going to be maiden names if you've been married, and it's generally going to be, so it'll be your married name, your maiden names. It'll have middle initials. Any nicknames sometimes will show up on there. So if you have a full name like Benjamin, like me, I'm referred to as Ben. In some instances, for financial reasons, I've been referred to as Ben. So you see Benjamin and Ben both on my credit report. But it's really those names that are associated with a specific Social Security number. So again, you see names on there, aliases that aren't yours. Those are the things that you're definitely going to want to fix. The other thing is going to be your current address. So current address is very important, but you're going to see past addresses. And they're allowed to put the past addresses on there, and those are usually the addresses that were associated with credit accounts. However, I generally, as a good practice, we like to scrub and take off anything that obviously is not your address or past address, but we like to go back and kind of take off anything that's 24 months or older and just kind of get rid of those. You send proof of your current address. Date of birth, Social Security numbers. Often I see wrong date of birth, seen Social Security numbers with 1 or 2 digits off. Well, you can imagine that can definitely wreak some havoc on your credit report. So that personal information, you need to make sure and check and see that all that is correct. The newest things that they've added, you're going to see some employment on there. You'll see employment history. Again, make sure that those are your jobs or past jobs. You'll see email addresses, telephone numbers. And again, it's just more of identifying factors. So it's okay that they're on there because it actually will single out or make sure that fraud's going to be less likely. Just make sure that they're very up to date, they're very accurate. You can't have any discrepancies whatsoever on that. So another thing that's included on your credit report are your credit accounts. Seems self-explanatory, but a credit account really is going to be reported in detail. And those are any accounts that are basically financing that's been acquired. So this is your mortgages, your autos, student loans, credit cards, anything that's going to, usually that you have interest that you're paying on there that has installment type payments or is a revolving type account like a credit card. And it's going to report in detail. So it's going to tell you, normally the important things that you want to look for are the balances, the date last active. So date last active is basically the date you were last made a payment is generally what it's going to be. And the date it's opened. So how long you've had the account. Again, length of history is important. It's going to show your pay history. So it's going to show on-time payments. And it's going to show if you've had some late payments also as well. And that'll report in detail, and that can affect your scores. So these are kind of the detailed factors that come into play there. It's going to show your limits. So on credit cards, the limit, let's say it's $5,000. That's where they're going to compute that balance versus the limit. So that's where they're going to get the ratios. And that ratio, again, directly affects your credit scores. So the credit accounts need to be reported fair, accurate, and up to date. So you want to make sure that this stuff is reporting and matches your records. Obviously, if you show a late payment on there on the credit report and you don't have any record of a late payment, that's something you need to go after a challenge and try and get that repaired because that could drastically affect your credit score. But generally, just check balances, make sure the information's right. Make sure, like if you have a Capital One credit card reported on there, make sure you have a Capital One credit card. If not, again, you need to go and make sure that that's fixed and repaired or removed from your account. So the next category are the dreaded collection accounts. That's right. These are the derogatory accounts that are showing up on your credit report. So it's one of the main reasons why we're in business, and probably the big thing we focus on to affect or help facilitate score increases and repair credit for clients. And it's something that's very serious, and it's used quite a bit for a collection tool on generally on people's credit reports. So a credit report is not meant to be used as a collection tool, but collection accounts are generally put on there, and you got to think, why are they on there? The main purpose is to collect money. The problem is that they're generally and most often not the original creditor or service provider. And some for instances on that would be, let's say you have a credit card that went into charge-off status. They may sell that off to a collection agency and to collect the debt, and it's sold off for probably pennies on the dollar for them to collect, and they're going to try to take action to do that. The first thing they're going to do as a collection tool is they're going to put their collection account on your credit report. Now, the big one that's really plagues the credit reports is the medical data. So you'll see several different medical collections on there, and they really don't care whether it's a $20 collection or $2,000 collection. They get these big bulk, collection batches of people with your names and collection amount on there. They throw them all on the credit reports. The problem with that is, other than having a collection on your credit report, is that the FICO scoring models don't decipher. They don't see words, so they don't know it's a medical collection, a credit card, or anything. They're seeing these as codes. And collection is a code 9. It's the worst. Best thing you can do is get those off there. But the collections are going to show up on there. They are required by two different laws to report. Number one is Fair Credit Reporting Act states that they have to report fair, accurate, and up-to-date information. And I'll get into that later, but these are the key tools that you're going to use to try and combat those collections on your credit report. The other thing is the Fair Debt Collection Practice Act states how they collect the debt, and that's a big factor as well. They can't do anything to harass somebody, and generally they can't be on your credit report if they don't give you prior notice. And usually if you've received a collection account or a collection call, they're just sending you a notice that says, hey, we received this collection account. If you don't respond within 30 days, we're going to assume that it's a valid collection, and then we're going to report on your credit report. Thing is, the majority of the collection companies, they just forego that and they immediately put it on the credit report. Again, another factor that you could use to remove these things from your credit report. The biggest thing with collection accounts is a lot of them have already been paid or they're not yours. So don't ever take for face value when you see a collection account on your credit report. If you have no idea what it is, chances are it's probably not yours, and you definitely need to challenge that information or seek for verification or validation on it. But the collection report's going to be on there. Usually it'll detail who they're actually collecting for. It's going to give the amount past due, whatever else it is. Again, that information has to be fair, accurate, and up to date. So that balance amount can't be 1 penny off. They're going to list the date of the original collection account, and then they're going to show the date last active and usually a past due amount. So those are your collection accounts. They wreak havoc on your credit, and they're very important to make sure that they're reporting properly or that they're even yours. If not, you definitely want to challenge that information. Okay, so public records. You're probably going, how the heck is a public record going to show up on a credit report? Well, a public record is anything that is on record publicly, and it usually is a result of some sort of court action. So this could be the cases of something where you didn't live up to some sort of financial obligation or contractual agreement. In the United States, a contractual agreement is actually infinite until it's satisfied. So it's either paid and it's met those obligations, or it's in default. And one of the remedies for defaulting a defaulted contract is to seek legal action. Legal actions usually result in a judgment of some sort on a defaulted account. So judgments are a matter of public record. Another thing would be you're in financial distress, or you're totally, you have to go bankrupt. There's a couple different bankruptcies that you could file, and those bankruptcies will show up as a matter of public record on your credit report. And generally, those are your two main accounts. There are some civil accounts that could show up that result in some sort of monetary responsibility. So if you've got a court matter where it's something to do with a rental agreement, let's say where you rented an apartment and you didn't pay all your bills, and they take you to court and they get the judgment on there, and it's a monetary judgment. Sometime you'll see those on there. The good news about that is that, if there is one, is that public records generally, the court cases don't detail your private information in a way that will meet the Fair Credit Reporting Act requirements for them to report on your credit report. So generally they don't meet those guidelines, which means you can usually challenge a lot of public information to get it off. Those public records could be challenged and result in removal, which will facilitate score increases and help your credit report. But public record on a credit report and in the scoring models is considered the most severe or worst thing that you could have on your credit report. And it's a matter of record, and it stays on your credit report and is allowed to stay on that credit report for up to 10 years, as opposed to 7 years, which is generally a credit account. So, again, it's going to stick with you for a really long time if you don't do something to combat that or to remediate that reporting on your credits. So how is your credit report used, and who's using them? Generally, the credit report is used in most cases is to make some sort of financial decision, and it's used. The data is all used to determine your ability to repay any potential loan obligations that may be extended to you, or it's used in some instances just to make some sort of offer of finance. But generally, it revolves around finance. But it's been the credit report and the credit scoring models have actually been expanded and found to be relative in several other things, and that's why it's so widely used now. And it's important to have a good credit report and a good credit score, is because they've expanded to go beyond just financial obligations like mortgages, autos, and credit cards. It's used to determine whether or not you'll be able to obtain a rental property if you want to rent an apartment or something like that. It's also been determined now to give you kind of a ranking or your ability to repay or pay your insurance in a timely manner. So home, auto, even life insurance, investment grade life insurance, they're pulling credit reports now, and that has a drastic impact on the amount that you'll pay and the quality of coverage that you're going to get. So if you have a low credit score, believe it or not, you could get brokered insurance, and you may not get some of the benefits of having a good credit score. Like you may not get towing on the auto, or glass breakage, or things like flood and earthquake might cost more. So insurance is a really big factor that was added. Since then, they've also found a direct correlation to employment and having good financial history. So take, for instance, if you're in financial distress, there's a proven fact that you're not as an efficient of an employee, and rightly so. You're worried about money. They found that it can actually drastically affect your ability to be a good employee. So they're starting to even take a look at your credit report now as part of a background check, and it's found that some employers are actually looking at your credit report to determine whether or not you're going to be an efficient employee or somebody to produce for them. So it's used now for things other than just credit accounts, but it's looked at for insurance, obviously student loans. It's looked at for now employment, and believe it or not, they've been using it to qualify people in dating situations. So, hopefully that's not that serious of a thing for you, but that's kind of where that's expanding and where it's going. So we're seeing the credit report being used for more things, more than ever, and it's very important to have fair, accurate, and up-to-date information on there and a good credit score.